everybody, it is Patrick McLain. I never thought I would have like a tagline. I think that's my tagline, just being like, hey, it's Patrick McLain. We are here again for Reimagine 2020 version 2. Last time I talked to this guy, I said, you know what's one of the if there's a benefit, not that I should think of benefits of COVID, but if there is a benefit of COVID, it's that this guy it would be so hard for me to get this type of human to talk to me at a quote unquote conference, right? Like the odds that he would like fly around the world to like go sit down, we're pretty slim. But like if the world's evolving in any way, it's that we can do things like this over the internet now, and apparently they're more acceptable, right? We just watched the DNC convention last night, right, or the last few days, which is virtual. Maybe you'll see it on the Republican side. So I get to sit down with Mark Yusko again, and this is probably one of the, I would say we try to follow the links and the comments of what people were saying from our last talk. And this is one of your guys' favorites. So whether you're a student, whether you're a general blockchain enthusiast, whether you're a project looking to expand, or a corporation, investor, I'm very excited for this interview. So before I butcher it anymore, Mark, how's your day? Where are you at? I think you have a new grandkid coming.
Yeah. No, I am excited to be back with you. And I think your point is really well taken. And I actually would fly around the world to hang out with you, because I have come to really appreciate our conversations. And plus I really, really want to come visit you in Thailand. But I currently, and it's kind of, I apologize for the background, bedroom, not my normal business background, but I am posted up in an Airbnb in Santa Monica, California. We drove across the country to quarantine for a couple of weeks before my daughter has our grandbaby number 2 at the end of the month. So we're pretty excited, and I'm testing remote work, which, I have to admit is actually going all right. I've already had a couple meetings this morning. I did a video conference with a family office in Germany. It was pretty exciting. So I think the world is shrinking in that virtual way, as you described, and we are able to do things. Now, I still like face-to-face, like you and I were just talking about getting some people together for a real lunch. And I'm actually having my first real in-person lunch today in Santa Monica, where someone's driving up from Newport Beach, and we're actually going to, speak face-to-face instead of over video. And I'm pretty excited about that. So the world is kind of coming back to normal, but we'll probably talk a little bit about it. But this trip that we did across country, I saw some things that got me very scared about where we are and what the impact long-term of this whole lockdown has been. And that's the negative for the traditional world. The positives for other things we're going to talk about, like blockchain technology, crypto, unbelievable. I mean, the upside is even bigger and more broad-based than we think. But boy, the traditional world, the traditional economy, some scary stuff out there.
So did you guys drive to not fly?
It's a great question. So the answer is kinda. And part of it is there is still, I believe, an irrational. I would get on a plane today, but there are people in my extended family who were less psyched about that idea. And mostly it's, if we're trying to minimize the chance that we have any exposure to the virus when we get to California to see the new baby, a car, we minimize that chance. And so it also worked that my wife's family lives in Oklahoma, my father-in-law's 84th birthday. So, the drive from Chapel Hill to Oklahoma, not that bad. It's 2 days, you stop in Nashville. The rest of the drive, we decided to turn into an adventure, right? We went to Santa Fe, did some sightseeing, although we were the only ones there. That was one of the scariest places. I mean, literally ghost town, unbelievable. That place is dying because of this lockdown. Went to the Grand Canyon, awesome. The only negative about the Grand Canyon, actually not a negative, but the only funny thing, 2 days, we were in a place, no cell service and no internet. Like, does that even exist on this planet? It actually does. And I was there. And it's a disconcerting feeling to not even be able to text for 2 days. It's kind of weird. And then, Santa Monica is great. But part of it was flying. Part of it was, hey, we could do a bunch of other things. You could see the Grand Canyon. So it was kind of a combination of things. But And part of it actually is this idea of, can I work? Because I didn't take vacation. I've been working every day. Could I work from the road remotely? And that's actually worked better than I thought.
I actually didn't think that I would be so interested in this point in the conversation, but as I'm hearing it, to be honest, like I'll have some questions. Like, so is that is that the first time you've taken a road trip in a while?
It is. It's we've done other shorter road trips, but it's the first time we've taken an extended road trip. And we have a unique family. So I have a older daughter and son, 31 and 29, and then I have a little guy who's 9. And we had him late in life, and it's awesome. But we're trying to do some things with him that maybe we do with the other kids, and it's been fun. It's been great. And him being in virtual school helped because they decided to make North Carolina schools virtual. So we were able to do it. And so he's out on school right now at the kitchen table, and I'm back here talking to you on the internet. So it's been good.
And then I don't want to like hold on too much of this, but I just picked out a few things. Like, so this was like, are you adjusting to like the virtual work environment? Because I heard you say it a few times. Like, do you feel like a majority? You're based in North Carolina, right?
Based in North Carolina. I have a big office in North Carolina. I got 20 people. I have a virtual office, not virtual. I have an office, physical office in New York, physical office in China.
So you work with your team in directly like in your physical office, but I'm assuming you take a lot of calls with clients remotely.
Yes. But here's the funny thing, Patrick, none of my guys or gals are coming in the office anymore, right? They got childcare issues, and some of them are afraid of the virus. And so I have this empty office. I go in every day because my wife's like, get out of the house, right? I have to, teach, and you go to the office. And the last time you and I talked, I was sitting in my office, which is much better background. But what's interesting about it is it makes me rethink, do we need lots of physical office? We actually just gave up our lease in New York. It actually was coming due anyway. And one of our guys in New York is actually relocating to Chicago, so that worked for us. But it makes me rethink, it's interesting. Our guy who leads our China office actually is in Singapore right now because he was out of the country on vacation for Lunar New Year, and now he can't get back in because they've closed the borders. So, do we need an office in Shanghai? Do we need an office in Chapel Hill? Can people just work from home? So it is making me rethink. Now, look, I'm a relationship guy. I like face-to-face. I'm a hugger, right? I'm going to get arrested for assault with a deadly weapon because I'm going to hug people post-COVID, and people go, oh, I don't, it's crazy.
Well, I mean, from my side, I would just say like, in whatever lifestyle I got into in tech, like for a decade now, I've been pretty lucky. Like, use Slack. I've had like many employees who've worked with me for 8 years. Mm-hmm. I've met them 3 times in person, right? And people will come to me from time to time and be like, I have to be in an office with someone. There's so much more value. And I get it. I get that part. Like, I get sometimes, if you have a really complicated conversation, it just things are more expedient when you just sit face to face. But I think over the years I've looked at people and said, you know what? But to be blunt, I think it's a little bit of a cop-out because I can sit with someone face to face in HD, like I'm doing with you right now. Yep. Or if I can't get something done over voice, it might mean that my communication skills or the other things, right, and not to you, but just saying like I've kind of applied this generally, and I think the world is realizing it, right? Like Google says
the world's definitely realizing it.
Like Silicon Valley is telling people not to come back for another year, right? So
here's the interesting thing.
Go ahead.
No, this is interesting. I don't mean to interrupt, but I'll interrupt. Here's the interesting thing. So I'm an old guy, right? I got the white hair to prove it. I'm about to be a granddad again. So I'm an old guy. Yet I'm an old guy who said, hey, this blockchain thing, this crypto thing is interesting. And people are like, well, why would you do that? Why would you risk your career to talk about this stuff? Like you're missing the whole point. It's innovation. It's the new opportunity. I think the same thing's happening here. Is I think this millennial cohort came up growing up in a digital world, they understand digital first. They understand, as you described, this remote work. All us old guys are like, nope, nope, you got to commute. You got to come in the office. You got to sit together. Now, here's the funny thing. Most offices, people come in, they go to their offices, and then they text each other or send each other emails anyway. They're not actually coming out of their office and talk to each other. And I can prove that. So in our office in Chapel Hill, I designed it, did all this cool stuff. I got these big open hallways. I got these areas with big comfortable chairs to have people come out and talk to each other. No one ever does. I had to threaten people. I said, look, get out of your office, go sit in a chair and talk to people. But they don't do it. So this idea
did you threaten them with snacks?
I've threatened everything. I said, I'm going to withhold your bonus. I'm going to take the snacks away. I've tried everything. But it's really hard to get people, because look, most of the work you're doing, whether you're coding, whether you're doing a financial analyst spreadsheet, whether you're doing a one-on-one sales call, most of it is solitary. So that can be done anywhere. A huge benefit of this movement is lifestyle, right? Why do people cram themselves into little tiny apartments in San Francisco and pay exorbitant rents and take on roommates just so they can be next to, able to commute to an office? Why doesn't that person go to a place in Arkansas where you can have a house and land and do the same work? Now, here's the only thing. I have a belief that right now, the people that come from the old world that are transitioning to the new world are about 60% effective, productive. That's my estimate based on traffic flow and email flow and interactions. And I don't think it's like, oh, I'm kind of on vacation. It's, hey, it's easy to get distracted. You're in your house and the dog barks. Oh, I'll go let the dog out. Or, the kid needs something. I think that's a challenge for some people to figure out. But the people who've grown up, like your, coworkers, they probably are as productive or more productive in this remote first work environment. So I think there is going to be a transition, but there's no going back. And what we're doing right now works, right? You're halfway around the world, and yet we just figured out a way for me to connect with some of your partners live here in California. That's pretty cool.
Sure. Well, and I'll just stop you on the one part. And I was thinking the whole time you're saying, because I hear what you're saying. I can't let you feel that, because I have one person in mind while I'm saying it. It's one of we have 3 business partners. One guy's named Levin. He's now 29. I met him when he was 27 with $100 million. And this 29-year-old was the guy who's like, I need to see everyone in person. And 6 months ago, I was telling him dude, you're lying to yourself. You think that sometimes you need it, right? But in general, we can get most points across, right? We're basically talking right now, right?
Yes.
If you were fully in HD, it might even be better than if we're sitting in the office.
Look, this works. The problem with email doesn't work because, printed text is only 7% of communication. You get no intonation, you get no body language, you get no facial expression. Sure. What we're doing works because we get all of that. You can hear my intonation. You can see when I do a wink, wink, like I'm making a joke, whereas we won't have that miscommunication of traditional text or email or Slack. This is better. Individual relationships, I still believe, need some physical in-person time, but it doesn't need to be all the time. And look, the reduction of commuting is a huge benefit. That's just more time either for family, because that's the other thing. If you take some of that lost time that used to go to commuting or lunch or lost water cooler talk, and you spend more time with your family and you have more balance, or you spend more time doing fun stuff like working out or walking around in nature, that will make people more productive and everything gets better. So I see huge opportunities for enhancement as opposed to fighting against it and saying, no, I love my big fancy office and I want all my people around.
Yeah. Well, I saw it at the last conference. I was staying up late because I was doing, I was in Thailand doing a lot of interviews with people in the States. and my family, I have a very big family, like 200 people, some in Florida, some in Colorado, Nevada, California. And we would do family reunions every few years in different cities. So I was like on some side, like the one of the crazy family members who traveled that maybe people don't see in person. Well, then when COVID hit and I'm sitting here doing interviews with people every day, I suggested to my family as a family reunion got canceled, hey, I have a $200 a month Zoom account, so I can send you guys all a link. And then next thing I know, there's like, I don't know, 50, 60, 70 of them on one call. And now I'm the I'm the best family member. Oh, yeah. Pat, like I'm joking with my grandma. I'm like, hey grandma, I'm really the strength of the family now. So you better watch out. Just joking with her.
That's right.
But so there are a flip. So but let me pivot off this a little bit. So you mentioned kind of the bets you had made on Bitcoin, and I saw some news the other day, and I don't know all the details, but like I think it's MicroStrategy.
MicroStrategy, yep.
Yeah, so they had taken a bet. How do you see that? Like, is that a big bet? Do you think that's like opening windows for people? Do you feel like you're not surprised?
And I don't want to use this word just for hyperbole. Look, I'm a hyperbolic personality. I speak in hyperbole. Everything in my life is hyperbolic. But this is not, right? What MicroStrategy did is monumental. And I choose that term intentionally because basically what you have here is a company that produces a lot of cash, right? And they have this treasury cash, and they've looked around the world and they've said, the central banks around the world are intentionally destroying the value of their currencies to try to get themselves out of these big debt problems that they have. And because of that, the value of my asset, which is that cash generated by my business, is at risk. So I need to find some other asset to diversify that treasury. And they did the work, right? This is not some capricious, hey, publicity seeking. They did the work and they said, this is an asset that we want to hold in that treasury. And it's very akin to, again, the monumental thing that happened about 2 years ago when the World Bank's SDR, the Strategic Depository Receipt, allowed the renminbi to become a reserve asset. And people were like, well, no, that can't be right. It's the dollar and the euro and the yen. Well, now it's the renminbi too, and China is here. And once you become a reserve asset, now you're in the running to become the reserve asset. And why this is so monumental is by Bitcoin making it into the treasury of a legitimate, serious corporation, it has the chance now to be in the running, not to be just a reserve asset, but to be the reserve asset. Now, look, I'm not trying to sensationalize and say Bitcoin's at any risk of suddenly becoming the world reserve currency. However, what I know we're going to see, and it's probably already happened. Actually, I think it has. I think Estonia, maybe. I'm not sure if I have this right, but I think Estonia has bought Bitcoin in their central bank reserves. I think
basket of portfolio.
Yeah, I'm not 100% sure, but I think that's right. But it's going to happen, right? And other central banks will eventually follow. Well, other corporations will follow MicroStrategy's lead, and there probably, truth be told, there are probably some other corporations that have done it but didn't announce it. Now, the genius of announcing it is you get the Robinhood Davy day trader group to bid up your stock, and that's beneficial too. So do I think it's the beginning of a long-term trend? Absolutely. Do I think it's just a recognition that Bitcoin as an application of blockchain technology is now viewed as a currency? Yes. And that's a great thing. And I have this great chart, actually. This is really cool. It basically shows, for 5,000 years at the top, gold has been the currency, right? All the other currencies have come and gone, from the Roman solidus to, the Ottoman Empire currencies. But gold for 5,000 years, 1 ounce buys a fine man's suit. Right? Today, you go to Savile Row, buy a fine man's suit, cost about, $1,800, about where gold is. So 5,000 years, gold has been money. 1971, we went off the gold standard, and the value of currency started to erode. Paper currencies like the dollar, the euro, the yen, and they've all started to decline. And so it's this cool chart, and it shows gold, fiat. So we went to the fiat standard in 71, and fiat starts to go like this, and crypto, which only started in 2009, start to go like this. And there's an X factor. There's a point, I don't know, 10 years out, 15 years out, 8 years out. I don't know what the number is, but there's a point at which cryptocurrency, which is just cryptographically secure digital currency, becomes the standard. And China will have a digital currency. The US will have a digital currency. Those will still be fiat, meaning the government can create them out of thin air, but there will be Bitcoin and maybe others, but there will be Bitcoin, which is a digital gold. It's real money. It's sound money. And the more people that adopt and use sound money, just like the more people that adopt and use gold, the more accepted it becomes. And there's this guy, Paul Romer, who was a finance professor at Stanford, and then he went to NYU, and then he kind of recently retired. He just won the Nobel Prize a year ago. And it's funny, I read his paper in 1987 business school, and for like 30 years I said, this guy's gonna win the Nobel Prize. I'm like, geez, finally they gave it to the guy, because he created something called the law of increasing returns. And what he said is, it's not always the best technology that wins, it's the technology that gets adopted the quickest and builds the network effect the fastest. And that's exactly what happened with Bitcoin. It's built that S curve, that Metcalfe's law, parabolic growth curve in the network. And the fact that here you and I are talking about it, and you're doing a whole virtual conference around it, and other people have, here's the crazy thing. Only once in my life, and again, I've been around a long time, got white hair to prove it. Only once in my career in the early 90s, did I see this wave of talent leave real businesses, traditional businesses, the people would think are legit, to go into this crazy thing. Back then it was called the internet. And if you left your job and went to work for an internet company, you were an idiot. Not so much. Those are really smart people. Today, like I gave a keynote presentation to one of the last physical conferences in New York before COVID broke. And this guy comes up to me after, he says, man, I loved your talk. It's so great. Can you call my mom? And I'm like, what? She says, she thinks I'm an idiot because I left my job as a real lawyer to go work in crypto. I said, yeah, I'll call her. But the quality of talent, and look, you're right at the intersection of that. I mean, you've built this army of developer talent that, one, gets this whole thing of remote work, tying that point back. Two, has decided that this space is worthy of taking the sharpest minds, which might have gone into, jet engine engineering or financial services at Goldman Sachs. And they're migrating to a place where they can create the future. And you've seen my pinned tweet, right? The greatest wealth is created by investing in something that you believe in before others even understand it. And that is why this whole intersection of talent and this migration of talent into this space is so exciting. Anyway, that's a long answer to your simple question.
No, dude. I think you already know. I thoroughly enjoy talking to you. I'm just trying to kind of like unwind that a little bit. I think I want to pull out just the last part, and then I have like two other points that hopefully you appreciate. I'm still actually not sure. It was actually one of the things when I did when we first started getting into developers, was saying that, like, why weren't there engineers, right? Yeah. And seeing, I almost like wrote a matrix at one point and said, if I'm a kid coming out of school today and I look at what is my, I'm an engineer, what is my best job? Okay, it's Amazon, Microsoft, Google, Apple, blah, blah. And what makes me good at that job? I can maybe make an application that's milliseconds faster, or I can take customer data or whatever, make the company money. And then say, okay, I'm actually still shocked, completely shocked the best people I know in Silicon Valley, and for all of you listening right now, for Ben Reisman, Faizan Ali, Parsa, for all of the best people I know, they are not over to blockchain because
Yeah.
like
Yeah.
there's still this break
Yep.
where I don't know if it's job security and normality, right? Like I think if they're
Inertia.
I think that there is this break. Like if you're 22 and you're coming out of college or something and like you don't have a kid or whatever, right? So you can
Yep.
take a bit of risk.
Yep.
But there is this whole talent pool that has maybe they're hit around 30 if I could pull some demographic similarities where it's like they still feel like it's kind of risky, where they still have like this thing in their head where they think working on blockchain technology is somehow tied to this price of Bitcoin, right? So it's like they can't
Absolutely.
they can't get past like
no, you're exactly right. And look, that's always true. And that is why, if you think of every great innovation, it's always the young people, right? Mark Andreessen, 19 years old when he, invents the browser. Look at Sergey, I pronounce his name, Larry and Sergey.
Sergey Brin, Larry Page.
Yeah. But young guys, and they weren't 19, but they were young. And it is, to your point, you're willing to take risk. You're willing, you don't know what you don't know. When you're at a Google, it's a really nice life, right? You make real money. You got a great campus. Right. You got all these things around you. You're around smart people. Like I say, you just got a new kid. You don't want to take, but that's the time to take risk where you've built a little bit of personal capital, a little bit of knowledge. And again, I tweeted this out, advice to my younger self a couple months ago, that if I were really smart, which I wasn't when I was young, that's when you want to take risk. But we've been conditioned as a society and as a culture, I call it the participation trophy problem, is you're not allowed to fail, right? No one's allowed to fail. Look, we have a whole socialized financial system now where we don't allow companies to fail. We prop up failing industries. We prop up failing companies. We have the CEO of what you talk about airlines, one of the largest airlines that are struggling like crazy. He's like, there's no choice but for the government to bail us out. Oh, no, there is a choice, right? You go bankrupt and the equity gets wiped out and the bondholders take over and we trim out the fat and you restart and you get real management. That is another choice. And that's the way it used to be. And this whole idea
I
failure
keep telling people lately,
bad is crazy.
Not to interrupt you, but I keep telling people lately, if I owned an airline, you know what I would do?
No.
I would rip out minimum probably 50% of the seats.
Yeah.
And I would make the whole airline, the whole plane, more or less first class. Yeah. And I would make every seat a little bubble, like a little air sealed bubble, so that everyone felt safe flying on my airplane.
Yeah.
And I would be like the first hermetically sealed plane in the world, and you would have no risk of being sick when you flew on my airplane. I would just assume that there aren't going to be seat to seat crushed passengers anymore. I would just get ahead of that curve and just say the future is in less passengers and more, hygiene, basically.
Well, it's funny. And again, I don't want to spend too much time on this, but I actually would go the other way, right? The human species has been dealing with viruses for thousands of years. This one's no different. It's not some, special virus. It's the same type of thing. And we will, right, practicing the normal things that we've always done, right? If you don't wash your hands, if you touch your face, if you do the normal things that get you sick in the first place, we've all gotten the flu, we've all gotten, a common cold. Now everybody says, oh, but this one can kill you. Yeah. Pneumonia can kill you, influenza can kill you, tuberculosis can kill you. All these viral maladies exist. And we've never changed our behavior. So I don't disagree with you that that's a great business model today, because the fear, and again, I think it's social media. I think it's that piling on effect that happens with everything. Everything goes extreme because everybody's social media feed is extreme. But at the end of the day, where I think we need to go is kind of back to normal, right? Which is live your life and manage the risks. If you're a high risk person, right? If you have comorbidities or you're above a certain age, look, if you're under 45, the data says this is the flu. It's actually not even quite as bad as the flu. If you're 45 to 65, it's getting worse. If you're over 65, yeah, it's a nasty little bug. So take precautions. But the average person should live their life as they do. And, the whole herd immunity debate, all that, it's, again, I don't want to spend too much time on this because I'm tired of COVID. I'm ready to go back to normal life. I'm ready to have these kind of conversations where we talk about, the future technology and big opportunities that we see. Look, yesterday we announced a big investment that we made in, one of the leading companies, Blockfi. And I get so excited when I talk about this company. And it's not just because Zach and Flory are amazing. It's because what they're doing is they're taking this incredible technology and they're applying it to a business that we've all dealt with for hundreds of years, the banking industry. And they're saying, you know what, there's a better way to do this. And the move from analog to electronic to digital is going to happen. There's no way to stop it. We're all going to live in a digital world, and everything, every stock, every bond, every currency, every commodity, every asset, every piece of real estate, every private business, everything in the world is ultimately going to be digital, tokenized. It's going to trade on these digital exchanges. And building the platforms and the infrastructure to facilitate those transactions, I think is one of the most important things on the planet right now.
So actually, let's go back to that, and I agree with you. By the way, I don't care what we talk about. I enjoy talking with you, and I almost promise you, read the comments of what's on this chat. I think people are going to appreciate this conversation. But last time we talked, like I had said something too. I said, with the way the market is right now, and if you go back to where Bitcoin came out in 2008, 2009, yep, and where we're at now, like, do you think that'll accelerate? And I think at the point is in May of this year, Bitcoin was at, I don't know, 7,500, 8,000. Yep. I can't remember. Maybe not. Yep. And now it's at almost 12.
Yep.
Bitcoin's lit on fire. Are you drawing parallels there to what's happening in like the fiat markets, the traditional markets, to why, I guess, and I guess to just pull out a little bit from that, these buzzwords around DeFi, like what do you think is going on in the crypto market?
Yeah.
Do you draw any parallels to what's going on in the traditional markets?
Absolutely. And look, everything that we're going to talk about, from whether it's DeFi, whether it's Bitcoin adoption, whether it's Bitcoin price, all of it is happening faster because of the response by the central banks and administrations globally to COVID. So basically what happened,
you've been very vocal about this, right?
Oh, very vocal. And look, and it's logical in the sense that if you're
so just for the audience that doesn't know what you're vocal about, give it to them in a few sentences. Like, what have you been vocal about?
Yeah, so I've been very vocal that the only way out for central banks and for the developed world is to print currency, to destroy the value of their currency, because you have a couple problems. One, you have bad demographics, right? The Western world, the developed world, Europe, US, Japan, Korea, a couple of the other big developed countries, they have this problem, right? Every day, 10,000 people in the United States turn 65. Every day, 10,000 people in Europe turn 65. And turning 65 is not bad, it's actually a good thing, right? It's better than the alternative. But the problem is 65 to 85-year-old people, they're not productive in the sense, the way we count production. They're very good people, very nice people, but they're not productive, and they don't spend as much. So you have this contraction in economic activity that comes from advanced aging demographic. On top of that, you have too much debt. And every time a country gets overly indebted, right, they only have four choices. They can pay it back, they can restructure it, they can default on it, or they can devalue it. Well, we can't pay it back, right? There's no way we can pay it back. We don't have enough cash flow, right? With debt at 3 times the level of global GDP, just the math doesn't work. I have this hashtag, math is hard, right? Math is hard, but 3 times global debt to GDP, not hard to understand. You can't pay the debt back. So the second thing is you could restructure it. Well, the problem is to restructure, you have to have the debt owner agree. Well, the debt owner is not going to agree to take less because they lent you $100. They want $100 back. Well, you could default on it and just say, I'm not paying you back. The problem is if you're a government official and you default on your government debt, what happens? You get kicked out. Well, that's not going to happen because they like their cushy jobs. They like stealing from everybody. The fourth is you devalue, right? You just devalue your currency. And that's what happened every time in history, from the Roman days to the Ottoman Empire, to the British Empire, to the American Empire. Oh, by the way, empires fall. You never want to be labeled an empire because it's really good on the up, but the down is kind of bad. We're there in America. And America's crumbling before our eyes because of a lot of these problems. So what was going to happen, what I've been very vocal about, is the central banks had to create excess money supply to try to keep economic growth going.
They can't go backward. They can't go back.
They can't go back. They can't put the genie back in the bottle, literally. And because of that, I call it the fiat fiasco, another hashtag, is Bitcoin is not rising. Gold is not rising. The dollar is falling. Because remember, every time we talk about a currency, whether it's Bitcoin, whether it's gold, whether it's the euro, whether it's the yen, we have to talk about it relative to something else, right? I can't just say the dollar. I have to say the dollar yen or the dollar euro or the dollar Bitcoin. And so that's what's going on is Bitcoin is going up because it's denominated in dollars. If I did it relative to gold, it's not really moving that much because gold is rising as well. Take the S&P. Everyone's excited because the S&P made a new high, right? No, it didn't. Denominated in dollars, it made a new high. But over the last 18 months, denominated in gold, which is a better form of currency for 5,000 years, it's down 44%. Just let that sink in for a second. The value of your stocks is down because you have to pay more. And I'll give you a perfect example. So we took this cross-country trip. We went to the Grand Canyon, took my son to Grand Canyon. And a couple things. One, it's actually a place that exists on this earth with no cell phone service and no internet. 2 days, I couldn't even do a text. It was very disconcerting.
Wait. Hang on. Let me pause you right there. I've heard this twice. Were you freaking out?
I was freaking
Mark
out.
Yusko?
No, I was freaking out.
Mark Yusko's no cell phone service adventure?
It was very disconcerting. And
but
like,
why?
How can they not?
But hang on.
Yeah.
I want to let you get to this. But like, why was that? Like, because you wanted to work? Because you're a workaholic? Or
no.
You're like, I can't check the markets? Or like,
no.
It was just the fact that you couldn't like read the news? Or like, what was it?
I couldn't be in touch with the people I care about. So I couldn't talk to my daughter, couldn't talk to my son, couldn't talk to my parents. The real thing that's disconcerting is like, well, no one knows where I am. What if something happened? Like, what if I fell on the trail and, tumble down the canyon? How are they going to find me? Like, if I can't even get GPS signal on my phone, how are they going to find me? So now I got over it and I really enjoy it. And I actually liked being unreachable. I am not a workaholic. I mean, I work hard, don't get me wrong, but I love my time away. I love solitude. I have my best ideas when I'm on a trail somewhere or, hiking or biking or not that I'm a big biker, but I do get on my bike and ride with my son. But what's interesting is, so I go to the Grand Canyon and I drive into town to try to get cell service. I couldn't even get it there. But there's a McDonald's and I stop at McDonald's and my son and I on Saturday mornings, we get big breakfasts and I get coffee, he gets orange juice, and I go to pay. And in Chapel Hill, it cost me $12, right? I know how much it costs because they do it every Saturday. And the guy says, that'd be $28. I'm like, what? Did you like double up my order? He's like, oh, no. There's fewer people here, so we raised our prices. I said, whoa, wait a second. Isn't this a, mandated prices? No, we're independent franchise. We charge what we want. $28. So think about that. The person who lives in that small town, who works at the Grand Canyon, wants to go get breakfast at McDonald's, has to pay 2.5 times more than the rest of us because the value of the currency is being destroyed. So That
and all the infrastructure had already existed, right? It had been projected to support some revenue model. And to your point, I came here. I was just telling you, I bailed from Bangkok. I said, I'm gonna get away for a week from everyone. I was tired of everyone. I found a nice resort in a town I knew no one was at, and I was like, you know what? I bet you could get like a 5-star hotel for pennies on the dollar because no one's there.
Yeah.
But then actually, the price I ended up paying, I think it might have been more expensive. And
I know.
And I didn't realize that as you were saying it, because like, how could they actually maintain their business, right, with the minimum requirements they need or resources? Like,
exactly.
They might actually have to raise their prices.
They have to raise prices.
Have an inverse effect. Like,
yeah. And to your point, there's a point like where you would say, nope, I'm not going to pay that. But you really wanted to go there. And you're like, it's the same price as ever. Okay, fine, I'll pay it. And I wasn't going to walk away. I needed the breakfast. But it is interesting in the sense that now I'm lucky. I'm not going to lie. I mean, I had $28, but there are people, unfortunately, who don't have $28, right? They had $12 for breakfast allocated that morning, and that's all they had.
Well,
so
what would have been your max?
That's a good point.
What would have been your max?
I should have had
$35, $38.
The funny thing is, it's that embarrassment thing. You're not going to say, "Oh, I'll cancel my order," because you want everyone to think, "Oh, of course I can pay that." But it's a good point. There should be a walkaway price. There should have been a walkaway price, and that was pretty darn close.
San Francisco, unfortunately, trained me to no walkaway price. Like when I came to San Francisco, I was like, man, some things are cheaper. Like I could walk places, whatever. And then I realized there's like, go to the corner store, you need batteries or something. You go to like a little bodega in the corner, and there's like $12. But like in where I'm from, batteries would be like $2 at a Walmart, right? And then you just get desensitized to it.
Well, but what is going to happen? Right? What is going to happen is because of that, now people are going to say, well, wait a minute. Now I don't have to be in San Fran. Now I can be. In fact, I talked to an entrepreneur just the other day. He lived in San Fran. He just picked up and moved to Tahoe on the Nevada side, partly for taxes, but partly for cost of living. And he said
there's a fleeing right now.
He hasn't missed a beat. He did say, and this is legit. He did say that it is harder to do kind of that. We've all done it, right? You can go to San Francisco or Sand Hill Road down in Palo Alto. And you can do 10 meetings in a day, right? Because they're just all right there. So that's harder because logistically you have to set up the Zooms and you got to get on people's calendars. You can't just drop by. So that's a little bit harder, but not that much. And he was really adamant that his quality of life is higher. And look, I'm a big outdoors guy. So I absolutely believe if I could wake up in Tahoe, go take a walk in the morning, clear my head, have some big ideas, come back, sit down, get to work, I think I'd be way more productive than living in a big city.
Well, as you were saying, this guy just left San Francisco. I swear I almost stopped you and said, is this his name? Because I know many of them now, right? Like there's a fleeing going on right now because the minute Google says don't come back to the office for a year or Facebook or whatever, and you'll use the go down to Sand Hill and walk in and take a meeting. I mean that's like the 2%, right? Like not many people can not many people can actually walk into those offices, right? So in some cases, getting a Zoom call might even be more.
Might even be easier. You're right. That's a good point.
But like, but anyways, I think it becomes in certain cities where being in that physical city geolocated was beneficial to your career path or your interests or whatever. And San Francisco, I think many people didn't understand it. And I mean, I can just use this and maybe you're in LA as a fashion designer or you're in New York at banking or whatever, right? Like there are certain places where geography in the past, at least, couldn't replace much, right? But like we take San Francisco as an example, that was about networking, right? And if you're not meeting people anymore in person, that starts to, right, like your favorite coffee shops where you meet VCs, like that starts to lose value very quickly. And what I think is more interesting, and I'm actually curious to hear your thoughts, what I keep hearing is how do these cities overcompensate, right? It seems like they're about to overtax now, right? Like California's now about to, like I think it'll put another accelerant on it. Like,
no, look, amen. It's funny. So I'll link a whole kind of funny thing. So Pete Buttigieg, the guy who spoke last night at the DNC, who was a presidential candidate, he's actually a family friend. His dad and I were close before he passed, and he actually ran my scholarship program up at Notre Dame for 10 years. And so, when Pete was in the running, people would joke with me, so what position are you going to get in the administration? I'm like, I'm not going to get a position in the administration. I mean, we're friendly, but, and they said, but if you could get one, what would you want? And I'm like, well, yeah, I'd want to be Secretary of Treasury, right? I mean, yeah. And so yesterday I was doing a call, and I think people knew this was coming up. And so someone said, so when Biden wins and Pete's in and they call you for advice, what advice would you give them? And it's funny because I just gotten here on Sunday and I heard about this whole wealth tax. And I said, well, first of all, look, never, ever tax innovation and wealth creation, right? That's just stupid. Now, I'm a big person that believes we should abolish the income tax. We should go to a consumption-based tax, and you're taxed based on how much you consume. And there are two benefits to that. One is it encourages innovation and wealth creation and people getting wealthy, and the wealthy then spend more, and you can tax at a higher rate for that incremental spending. The second thing you do is you capture all the black market, right? If a drug dealer goes and buys a Lamborghini, you can tax him. If he gets income illicitly, you can't tax him. So it taxes every activity. So it's a way better form of taxation. But the other thing I said that I would offer is where we need to focus, and it comes back to the genius of your title for this conference, right? Reimagine. The way we reimagine work and reimagine progress and reimagine the future is we have this, I think, ill-advised focus on four-year college and I'm a big believer in the humanities education, but what I think we really need to focus on is technical education and technical schools and even programs that are being more novel, right? Where it's online education, where you get the education for free and then you pay a percentage of your future salary. So I think that would be the advice I would give too, is to say, let's reimagine and refocus how we build talent and how we focus on building that talent. Again, back to this global war for talent. And the last thing, and this is just, I wish someone would do this and I would volunteer to run it. The smartest government in the world, bar none, is Singapore. Not just because what they built, and they've basically created the Switzerland of Southeast Asia, which is the fastest growth market in the world, but they also figured out that the entitlements that they've promised people, the way to fund them is not to tax their existing people because you have a demographic imbalance. It's to invest the money in business and technology in a venture capital model, and then use the proceeds of those wins to fund. So I would create $1 trillion, instead of printing $3 trillion and sending it to people in $600 checks, put $1 trillion in a fund to invest, to own a piece of companies in the future that will be the next Apple, the next Google, the decentralized version of Twitter, the DeFi, the decentralized financial organizations like Blockfi that will replace banking. Own pieces of those businesses and then take the proceeds of that and fund your future entitlement benefits. So we could create the greatest venture capital fund in the world, bar none, because we have Silicon Valley, we have Austin, Texas, we have Route 128 in Boston, we have all the technology, we have all the entrepreneurs, we have all the analogs, and they could take the capital and invest it like government of Singapore and Temasek. That could change everything. It would change our budget problems. It would change this ridiculous, massive money printing to devalue the currency.
All right. Hang on. Now, I got something to say. I didn't know where we were going to go next. I think you might want to hear this, and maybe I'm wrong, but I think I hear what you're saying. I might go on like a 2-minute rant here, so bear with me.
Yeah, let's do it.
I've always been very good at math. I've always been very good at tech. I never claimed that I was like an economist, but I felt like I always knew enough about math to be cognizant or understand economic theory. And I had never, I'll just be blunt. I've never been a student of economics. I've never gone too far down the rabbit holes.
Right.
I can get like a high level glaze area. Obviously you've gone down a little bit farther down the rabbit hole. Check out the next event. Is already 20,000 people have signed up. Called it DeFi in September. I called it WTF. WTF is DeFi down the rabbit hole. It's just like everyone in crypto is signing up. So one of the things, like many years ago, I always got stuck in the point and say, okay, why can't everyone be a millionaire? And I always heard from many people that said, okay, we have theories or we have statements that say like money doesn't grow on trees, or that if you printed out $1 million for every human on the planet, that the price of a gallon of milk the next day would be $200,000, right? There's these economic theories that essentially say why people can't all have $1 million, right? And one of the things that always tripped me out, like growing up in Las Vegas, there's like Bigelow Aerospace, like aerospace company. I've always been intrigued. Like when I saw Planetary Resources, a company like went to go aim and say, okay, we're going to bring asteroids. We're going to tow them, put them in orbit around the moon, and they might have high levels of, and especially when I would think of these other kind of, old sentiments like the gold standard, right? Like, okay, if you were to stick to the gold standard and then you could bring asteroids with more gold on them than all of Earth, how would that destroy the gold standard, right? So
crush it.
I was always pretty sure that economic theory was written by old white guys hundreds of years ago, right? And that most of what we're probably running off of, and I'm not trying to like demean anyone's theories in whatever way, I'm putting a general brush on it, is that like most economic theories we're going off of have not been invented in the last, let's say, 40 years. Is that fair?
Right.
Just on that point?
Yeah, absolutely. Yeah.
Right. So, and if they haven't been invented in the last 40 years, the dynamics that have changed, the innovations that have come, the speed, whatever, would suggest to me, without even digging into their books, I'm not even looking in their books, I'm just guessing before even looking, that like there's no way they could have been accurate, right, based on current standards. So I see some things that I think the math is changing, right? And I'm genuinely curious on how we look at, or how we're basing economic theory now, right? And COVID is a very good example, right? I think if you were to tell people as I know American politics say, give people welfare or basic economic,
universal basic income.
Exactly, right? It's a very politically charged thing. Then you see other countries testing it. I had started to see people test it. At some point, the math doesn't add up, right? And
it doesn't add. It never adds up. And look, the point on economics is sound in the sense that all theory should eventually evolve and change with new information or new circumstances, except for a couple things. Basic supply and demand is eternal, right? It's an eternal equality, right? Think about this, right? If I have $1 million, right, and you don't, so if I have $1 million and you don't, and I print another $1 million and give it to you, all right, what just happened, right? The supply of money just doubled, but the demand for money was stagnant, right? Because there's still only two of us. Now, the problem then is you and I are going to go bid for that bottle of water. And now that you have money, right? Before you didn't have money, so you couldn't bid for the bottle of water. I got to pay the price, that it cost to make it. Now we're going to get in a bidding war, and the price of that asset, because again, fixed supply of water. Now we could always create more water, but one bottle of water, we're both going to bid for it. Now there's more demand, right? Demand just went up, so the price has to rise. And so ultimately, I tweet about this all the time, right? If creating wealth were as simple as printing money, wouldn't every country just do that? And the answer is yes. And so let's look at this examples in history where countries tried that, right? They tried to just print wealth. What ends up happening is the total destruction of the currency and the economy. And there's a tipping point, the Malcolm Gladwell thing, there's a tipping point. It doesn't always happen right away. And it's like the famous Ernest Hemingway quote, right? How did you go bankrupt? Well, slowly at first, then all at once.
All right. I don't know what point we're going to come in here. I never interview professional. One of my rules has been to never edit an interview. That way no one could ever say that I'm hiding or doing anything weird, but we lost connection there. My laptop was dying. I think Mark was saying something about kind of the evolution or what will be the outcome of a variety of economic theories or how people are going to treat money or inflation, et cetera. And I'll pass it back to you, Mark.
No, look, what we're talking about is this idea that economic theories are old. There's no question they are. But like most things in this world, there's very few things that are new. All the management books that are written, right? All they're doing is quoting Cicero and Seneca, from 2,000 years ago. And the same is true in economics, right? All of it goes down back to Adam Smith.
Do you know any country working off economic theory has been created in the last 20 years?
So the answer is yes. I mean, there certainly are countries, particularly in Eastern Europe, Estonia and things like that, where you've got some highly educated young leaders who kind of taken updated economic theory and put it in place. But at the end of the day, there's one simple thing that will never change, and that's the law of supply and demand. And with respect to money, this is really important. Look, if creating wealth was as simple as printing money, then every country would do it. But that doesn't work, because if every country printed money and we just stacked it up, it would devalue. And that's exactly what's going on right now. And that's why fiat currencies are devaluing. That's why real assets like gold, silver, Bitcoin are rising in value. And to this point, right, and we were talking about, like, if I had $1 million sitting in front of me and you didn't, and there's some asset in the middle that we both wanted, I would get to buy it. And I would have control of the price in the sense that I would only pay what I thought it was worth. Whereas now, if suddenly we printed another $1 million and gave it to you, the value of that asset would, or the price of that asset, not the value, the price of that asset would rise, because now both of us could bid on it and there's more demand. So demand rises, price follows with fixed supply. Now we could go out.
I don't want to get too lost here. And I'm realizing I got a little sidetracked because it's coming on 1 a.m. for me. But, like, not that I'm worried about the time, because I want to talk to you all day. But, like, do you think that if, like, billions of people go to space and build, like, apartments there, like, is there any lack of supply or demand? Like, is the only thing that we're basing this off of the rules that we're staring at right now? Like, if we transcend this.
It's a great point. But look, supply and demand works in that regard too, right? If suddenly, like, to your point, because this is topical, if an asteroid was able to be mined and suddenly there were more gold,
or if we build a billion condos in space.
If we build condos in space, the supply of housing goes up. The demand for housing is relatively fixed because population growth is what it is. So the price of housing would fall. No question, right? The price of a condo in San Francisco would be less if people had a choice to live on Mars. Now, I actually don't think that's going to happen, but let's see. So, but the real point.
But what's the highest valued private company in the world?
Highest value private company?
Yeah.
Oh, that's a very good question.
It's SpaceX, isn't it?
It might be SpaceX. It
I
might
think
be
it is.
SpaceX.
I've actually held on to this theory for a while, and I think actually we're ignoring. Like, I honestly think that I mean, I honestly, I think there's some correlation. Like, if you build 1 billion condos in space,
Yeah.
how much money do you need printed on planet Earth to pay for those condos? Like,
Yeah. But the
what is
problem,
the total dollar supply? Like,
yeah, but here's the problem, right? Is, and Steffi Kelton, right, is all about this, modern monetary theory, and that as long as we're doing productive projects, that we can print as much money as we want, as long as we have the world reserve currency. The problem is that starts to break down in the world in which this whole conference is all about, right? In this reimagined world where cryptocurrencies, particularly Bitcoin, have a role as a stabilizer of the profligacy of central banks around the world to devalue their currency and to print at will. So let's bring this all back to crypto and to why, one, supply and demand is really important. Two, why traditional economic theories still apply, even though we're talking about new age technology. At the end of the day, wealth is created by providing goods or services that people need and are willing to pay a price for. When you devalue the currency in which you make that exchange, then what happens is hyperinflation. And we've seen that in Weimar Germany after the war, 100 years ago. We saw it in Venezuela recently, where, price of chicken went from, a couple pesos to infinite because you can't even get a chicken. So what happened, and I think we talked about this last time we were together, it's the dictator playbook, right? When the top of the food chain becomes very narrow, in the dictator case, it's like one guy or gal. But if it's a small group of cronies, like what we have in Washington today, what happens is all the wealth gets funneled up to that top, and the wealth and income inequality stretches. The bottom get really, bad off. And I'm telling you, on this trip across country, I saw some things that just scared me. Amarillo, Texas, dying, right? Santa Fe, 1 out of 3 stores in Santa Fe boarded up, shutting down. Talk to merchants. I mean, they hate the governor. It is real pain and suffering. And so in that environment where the rich are getting really rich and the poor are really struggling, what happens is you get an acceleration of this trend, an acceleration where, if we just print more money, everything will be fine. Well, no, it'll only be fine for the people at the top. The people at the bottom lose. And so what Bitcoin does, and I hashtag Bitcoin fixes this, right? How Bitcoin fixes this is Bitcoin's supply is fixed. And as demand rises, the price will rise. Now, the cool thing about it is then we can Satoshicize it, right? We can take it to decimal points and we can make it more broadly available. And I hope soon we start talking about Satoshis instead of Bitcoin, and we price things in Satoshis, and we think about, because then we can have hundreds and hundreds of millions of people involved in this network instead of just the handful today. So, or not handful, but small number. So ultimately, I'm a chemistry guy, the rate limiting factor, right? So if you put Na and Cl to create salt, that chemical reaction will only occur as fast as the amount of Na. If you don't have enough Na, you can't make NaCl, right? So, or Cl, if you don't have enough Cl, you can't make NaCl. Same thing's true here. If the rate limiting factor is the creation of this sound money that is more portable than gold, it's more divisible than gold, it's easier to mine than gold. And so, again, we just made, or we're on the verge of making an investment in a company that takes stranded gas, right? Natural gas is being flared into the environment, which is bad, captures that gas, puts it in a turbine, generates electricity, can mine Bitcoin. It's a pretty awesome thing. It's good for the environment. It's good for the world. It's turning energy into value, which is what we do every day, right? You and I are today, right now, are hopefully turning energy into value. We got up, we fueled up our body, we sit here and we talk to each other. Hopefully that creates value for somebody listening. Everything in the world is about turning energy into value. That's one of the other genius things about crypto, and particularly Bitcoin, is it's a very efficient way to turn energy into a store of value that is globally accessible, transferable, and just a better form of money.
First off, for everybody listening, like for what will be the second time, and I'm completely shocked that Mark came, but I'm not shocked. I talked to this guy quite a bit now. Like, for everybody who's gonna see, and then whatever, we pre-record these, and you'll see it when that comes. This is amazing. It's amazing to have these kind of conversations. And like, I think you already know Mark. No, but I respect you a lot. Like, just hearing you talk about your, science background, the way your mind works. Like, you're a very smart guy. I'm sitting here half drinking Red Bull, and I've been drinking coffee, and then tonight I was bored or kind of like worked all week, so I bought myself a $500 bottle of wine at a dinner. This isn't reflect my normal life, but I grabbed the other half of that, so I'm gonna get there. I want to say a few things. One, on the Venezuela stuff, dude, I'm gonna introduce you to someone. So the other day,
awesome.
One interview I got was from this guy named Gabriel Jimenez. This is Google it. Just Google the coder. Google the coder and the dictator in the New York Times.
Yes. Yeah. Okay, exactly.
He's the dude who built it for Maduro. And
oh my gosh.
My favorite chef in San Francisco is a guy I've known for 10 years from Venezuela. So I spent 4 hours with this kid the other day, and then sent it to my friend. Yeah. You should talk to him as well. I'm
on it. I would love that.
Amazing story. Smart kid. Like he went to Harvard. He was actually it was a weird his story. He wasn't actually the genius behind it. It was like a series of chance, and he was more political actually.
Yes.
But the other part that I wanted to talk about, and I realized I think I lost my track a little bit, like kind of talking about economic theory. So I want to zoom out here for just 1 second. What has been tripping me out, right? So you could say that I'm in the bubble of crypto. Like I'm not the trader. Mm-hmm. So I work with many people, and I'm not the guy. I've never bought a single coin in my life.
Right.
I own quite a bit of Bitcoin.
Yeah.
But I've never bought an ICO thing or whatever.
Yep.
Like all my friends do this, and my business partners do it. I've never done it. It's not my thing. I'll build it. They'll come to me. They can't fire me or get rid of me ever because I'm the only one that can actually help them.
That's right. Like, you know where the keys are.
Yeah. Like I'm irreplaceable. But like when all this DeFi stuff started, maybe a month and a half ago, like all this yield farming and all these kind of things, I started sitting back and we were talking about economic theory, right? And what tripped me out was that I was looking at it and I was like, oh shit, like these people, all they're really doing, like you look at Ample or whatever, like, have you heard of the project Ample?
Yep. Yeah.
So like I kept joking with everyone, and then someone sent me the other day that there was a new project. Like people keep forking Ample. I was like, it shouldn't be called Ample. Like if you go to Ample's website, it's actually some Austrian economic theory from some old dude, right? So I was like, you know what's funny to me right now is that like I could see it pretty clearly. Like I'm actually very good at building tech, and I'm very good at distilling things down. So I'm looking at rooms like if you were to sit in our office and as soon as you can come to Thailand, right?
Oh yeah, I'm on it.
I'll turn around and like take my headphones out. There's like $300 million in the room. Like traders I've known for 5 years, right? And these guys, not want to say how they do it sometimes, but they move markets, right? And I look at them and just laugh. And I'm like, all right, like, I'll go to the whiteboard. And the last few weeks, and I think they all started to get it and say, I think I understand what at least certain portions of DeFi are now. It's pick your economic theory.
Yeah.
So in this case, it might be this old Austrian dude. Mm-hmm. And then pick your level of greed. Do you want to be very greedy or not greedy? And then pick your level of anonymity. So do you want to be anonymous or not anonymous, right? Mm-hmm. And I've actually been throwing ideas around lately about like why not make these building blocks interchangeable? And it's what I see more actually. I do feel like there's a retraction back to now that people are saying, they're now finding different yield curves, right? Like all these different things that say they're just actually going back to the drawing board. And now they are, I would say the average age of the demographic is under 30.
Yeah.
That's like primarily interested in this right now.
Yep.
They are not like economic experts, right?
Right.
But what they're really clinging to right now in this DeFi buzz, and I want to get your thoughts on this, is like I'm leading up to my question, is that like I think all they're doing actually is stumbling on economic theories that they're finding interesting that they had never heard about before.
Yeah.
So like A, have you heard about this DeFi stuff? B, what are your thoughts on it? I know DeFi is a very general conversation.
Yeah.
But like since we talked in May, a lot has happened, right?
Yeah. No,
like,
a lot. And look, DeFi at its core could be a very compelling and really, world-changing movement, right? Decentralized finance, if we just take it at its core, has the potential. It's kind of like why we're excited about Blockfi, right? What does Blockfi do? Right? They take in deposits of digital assets, they lend those assets, and they pay the depositors. Well, that's just a bank. We can't call it a bank because the banks like that term, but so it's a blockchain-enabled financial services company, Blockfi. DeFi, same thing. If you think about the world of finance, I always talk about it this way. There are two types of entrepreneurs in the world. There's the big E entrepreneur and the little e entrepreneur. A big E entrepreneur creates something new, right? We talk about it. Mark Andreessen creates the browser. A little e entrepreneur takes new technology and applies it to something old and makes it bigger, better, faster, stronger, less expensive, more efficient. That's
what's happening right now at scale. Like
that is happening at scale. And so that's the good part of DeFi. And that has the potential really to be a world changer. And there are trillions with a T. And again, the trillion word gets overused, but you remember 1 trillion is $1 every second. So you and I would have to sit here and figure out how to spend $1 a second for 31,710 years. It's a long ass time. So 1 trillion. So there are trillions of dollars of capital that's wasted in the inefficiencies of the current centralized finance system. So DeFi as a movement, great. Now, with every movement where there's money involved, you will attract scamsters, fraudsters, bad people. That's definitely happening. And there are people who are saying, oh, we're a DeFi project just to gather capital, like penny stock promoters or boiler room people. Well, that's definitely happening.
Well, and let me pause you right there for a second, because someone pointed this out to me today. Was that about a week ago, I kind of woke up and I was tired of hearing people talk about these kind of things. And I said, you know what? For the last 3 years, for my previous 10 years, I built stuff. For the last 3 years, I built other people's blockchain products. I kind of wanted to call people's bluff about a week ago. And I woke up and I said, I'm taking 8 of my best developers. Mm-hmm. And for the next 120 days, I just put $200,000 into a bank account. And for the next 120 days, I'm going to call on everyone that I trust with good ideas, and we're going to just have an idea factory. So we're just going to rapidly innovate, and 8 developers are going to sit there, and we're going to build many things, stick, not stick, and we'll see. Hopefully, at the end of 120 days, we have 1, 2, 3 good ideas, and we'll see where it lands. It's just an experiment. And I watched so many people freak out, right?
Yeah.
And one group of people that got brought to that table was like a PE firm who said, like, they're trying to acquire traditional businesses, convert them to crypto, right? Yeah. And Levin today, when my partner came to me, he said, actually, this is what happened before in 2017. He said, you, Patrick, you weren't exactly there, but so many companies were trying to apply the term blockchain, right? So forget about DeFi. We already went through this cycle, right? Where people just tried to randomly apply blockchain to
Riot blockchain. I mean, Long Island blockchain.
So I didn't mean to interrupt you, but like, I don't know what the hell happened. Literally in only 8 weeks, but like the entire sentiment of at least the hackers I don't know.
Look, money is a powerful motivator.
Yes,
Money is a powerful
like,
motivator, right?
yes,
And
yes.
anytime
Greed is at an all-time high on this level. Like,
greed is an all-time high. And look, Gordon Gekko was right. Greed is good. You know, greed motivates, greed builds, greed is good. Now it can go to an extreme, and look, anything in an extreme, right? Love becomes lust, greed becomes, destructive. I mean, there's, jealousy becomes envy becomes jealousy. I mean, everything taken to an extreme is bad. But ultimately, where this is going, I think, is you're going to see a lot of projects succeed. You're going to see a lot of industries changed. You're going to see, unfortunately, a lot of things fail. The ICO wave, we were very public. We said, all right, we're not going to do ICOs. We're going to invest in equity. They said, oh, that's ridiculous. The ICO business is going to replace venture capital. Like, well, okay, but let's think about this. What is an ICO, right? It's a crowdsourced pre-seed stage venture capital deal with the nasty little problem that you don't get equity, you don't get debt, and you don't get a claim on cash flows. It's actually not a really good deal. Now,
there's no tie to business operations or dividends.
So 1% ish of the deals actually had something, right? They were big enough as ideas, because the problem with pre-seed stage venture, it has a 96, 97, 98% failure rate, right? That's the reality. Lots of people have ideas, most of them fail. It's okay. But the ones that are successful become monsters. So the people who wanted to build a shotgun portfolio of ICOs, great, that's fine. Same thing here with the DeFi, right? If you're just investing in stuff because it's labeled DeFi, you're going to lose most of it. But the ones that actually build something could be really interesting. Now, I'll give you an example. There's this company, Synthetics, right? One of the early players. What they do is really interesting, right? What they're trying to build is really interesting. It's legitimate, better use case. And
might as well be virtual real estate for stocks. Like.
Yeah, exactly. And so that construct can be applied to derivatives markets, can be applied to real estate, it can be applied to private businesses. There's so many applications. Now, it has to be built, it has to be secure, it has to be legit. And so that's all coming. But you've seen the S curve, right? S curves all go the same way, right? You have this early frenzy where everyone gets involved and the bad guys get involved and the speculative price and then there's a crash. There's what's called a bust. It's usually, 3 or 4 years in and there's a bust. But then from the bust, the survivors create all the wealth. Think about the internet, right? The early pets.com, this is so funny, Chewy, right? A lot of people listening to this call probably use chewy.com. It's the same damn company as pets.com. Exactly the same. Yet pets.com is the failure of the internet, right? The poster child for stupidity. No, it was just before its time. Netflix died 3 times. And I always tell people
Netflix was originally the first thing I ever saw from Netflix was a laser disc. My rich friend's dad, like when I was like 13 years old, it was a laser disc. It was shipped to your house. It was,
and then CDs, and the CDs would break or they'd get lost. And then they tried video on demand, right? But it didn't work.
So are you just numb to it now?
Pardon?
Are you not numb. No, but like, hang on 1 second. I'll let you go. Because I realized earlier when you said something, and I had said it on our previous interview, and I had actually held it after you told me, and you said it earlier when I said, our last interview said, have you seen something with this much like vigor, right? Like, have you seen something that people like Bitcoin is for drug dealers, Bitcoin is for this, and you said very calmly, Patrick, cell phones were gonna give you cancer and blah blah blah, and the calmness in which I've seen you say it not only once but now like 3-4 more times through this interview makes me feel like your background in your experience, like I can't match that part, right? Like I can be very passionate about many things, but like I wouldn't dare be like, can tell you, I've seen this 20 times. Like I can tell you about certain things,
Look,
but
that's just being
not
old.
these
Look,
markets.
it's just
No, but I mean, come
no,
on.
no.
You call it old.
Wisdom comes
I'll call
from
it. There you go.
age.
Wisdom. I'll accept wisdom. I want to accept old.
Yeah.
I'll accept wisdom.
Wisdom comes from age and experience. And what is experience? Just accumulated mistakes.
There's men older than you without this wisdom.
Well, I appreciate that. But here's the thing. I live by the mantra that Dean Smith, the famous coach at UNC, had called Ralph, right? When you make a mistake, and we all make mistakes, and the reason most people who don't have wisdom, the reason is arrogance and the inability to admit mistakes. That's my belief. So when you make a mistake, you have to Ralph, recognize it. So realize that you made a mistake, admit it, hardest part, actually admit I made a mistake. Again, you're too young, but there was a show on TV when I was growing up called Happy Days. And there was this character, Arthur Fonzarelli, the Fonz, right? And he couldn't say the word wrong, right? I was I was He couldn't say the word wrong because he was too cool. So you have to admit it. Then you have to learn from it. And then you have to forget it. And the other reason that people are not successful or people don't accumulate wisdom is they're constantly focused on the past. And another great coach across town, 9 miles away, Coach K, says this, right? What separates the great players from the average players? The average player always focuses on the last play. How many times have you seen a guy miss a shot, go down and commit a stupid foul? All the time, because he's thinking about missing that shot. The great player thinks about the next play. He misses the shot. Michael Jordan says this all the time. I've missed thousands of shots. I don't even remember taking the shot because I go back and play good defense, I steal the ball and make a layup. Same is true in investing. Same is true as technology. Same is true in life. If you can't recognize, admit, learn, and forget, and move on and accumulate that experience and build wisdom over time, okay, that I can't explain. But I've been lucky. I've made lots of mistakes. I've worked with some really, really smart people. I've been involved in some really cool things. And ultimately, and I believe this wholeheartedly, is there's very little that's new. All we do is recycle things, kind of like fashion. We recycle things in a new environment with new tools and new techniques. And that's what's going on here. And that's why decentralized finance at its core is revolutionary. Why Bitcoin as a protocol for the Internet of Everything and the trust net, as I like to call it. So look, we had computers, 1954 mainframes, 68 microchip, 82 personal computers, 96 the Internet, 2010 the mobile net, and 2024 the trust net. When everything is connected, when everything is running on blockchain as an operating system, all of these things start to make sense. And everything comes back, again, to the title of the conference. Reimagine, right? Think outside the box, think differently, better, think like there is no box. The best, you talked about it, the best developers the best creators they don't know what they don't know.
You want to make a big impact? You want to make a massive impact right now?
Yeah.
I know we're running over. So do you have 15 more minutes for me? If
Sure,
you give me more than that, I'll be.
No, I have 15 more. I do. I have until 11.
Cool. I won't. You want to make a very, very, very big impact right now.
Yeah, that's a great lead.
We're invested in companies, and some people can hear this right now, and like, there's some founders with massive amounts of influence that are like influencing markets right now to the tune of like, I've seen their companies go up to $100 million market cap in under 6 weeks. Mm-hmm. And honestly, like, and I'll only speak for another minute or two, and I'll lead you into what I think people probably want to hear you say. Mm-hmm. I think that I wasn't completely there through 2017, but I saw kind of the last 2 quarters of 2018 where basically everything fell apart. And if we could peg things to what fell apart, I would say it's that people raise a lot of money they go 2017, 2018 in crypto specifically.
Yeah.
So not traditional markets, but like they raised a lot of money. They didn't build anything, right? Like there was a lot of over promises and right? So I have and I've been slightly pissing people off lately just by suggesting the fact that like, hey guys, like maybe it's not smart to raise this money, right? And like promise all these things, or you might need to be careful what you say in the groups that you own, right? Or the Facebook channels that you own with 200,000 people, right? The SEC is going to come and rain down hell on some people, and they don't get it yet. Like if I came late to 2017 before, I feel like I'm really early at this next stage. And I've hired Perkins Cooley. Like I have spent $250,000 on some of the best lawyers to understand how this is going to end, right? Like, so I did a little exercise the other day because again, like I somehow in my trajectory in crypto, I've always, maybe it was intentional, maybe it wasn't. But what I had always tried to do, or what I've somehow done, is again, like I mentioned earlier, I've never invested in a coin, never bought a coin, I've never had a coin, or never made a coin, I've never like, I'm like, I'll build something if it's cool, great, right? Like that's my thing, right? And then I watch some of my other friends be like, hey man, I just made $10 million. Like, why am I paying for dinner, asshole? Right? Like I want to grab that sometimes, but like for better or worse, I just have drawn this line. So the other day, I actually had to sit down with people because I knew it. Like, I go back 15 years. Like I've won awards for Microsoft when I was young. Like I know more about tech than like almost everyone I know in crypto, right? And like, so the other day I did some exercise. And I said, what is DeFi? What is DeFi, right? And almost at the beginning, I was like, is Bitcoin DeFi? Like sarcastically to them. And they were like, oh shit, is it? And I was like, yeah, I'm pretty sure it is, right?
Pretty sure it is.
Yeah, like I think I think this is like a glorified marketing campaign, which I can't get mad at, right? And then I started to see, and I some of my best friends and people I trust, I said, can you explain what you think DeFi is? And they had given me this wide array of applications, right? So they were like, decentralized exchanges are DeFi, or exchange, staking, coins, all these things. So like, my question for you is, do you think, well, on one side, like, is DeFi marketing hype? And let me break this out. And then like, what do you think the actual innovations are? And then I'll just bundle one more. What would you tell people who are listening to you, right? You have a very successful career. And for everyone listening, right? Like I've come to know Mark just a little bit. Like I think this is probably the 5th hour we've talked on Zoom calls or something, 4 to 5 hours. I've come to have respect for you. So like, this is not an attack. This is for everyone that trusts me to listen to this guy and say, I'm telling you to listen to him. I think he's smart. What do you think are the traps if everyone races to this thing right now and uses this as a buzzword to raise money, to maybe offer products that the SEC later comes and shuts down, maybe gets them into legal trouble? What do you think this market's really at right now?
Really, really important question. And I'll take the 3 questions in 3 pieces. So the first one, is it just marketing hype? So I'll use an analogy. So in the traditional investment world, there was a big move a few years ago about smart beta, right? There were all these mutual funds and ETFs launched that were smart beta. And I went public and ranted, endlessly that, guys, that's an oxymoron, right? That's jumbo shrimp. That doesn't exist. Beta is dumb. And I don't mean unintelligent. I mean, beta is rule-based, right? It can't be smart, right? The beta of a market is what you get for doing nothing. Right? If you're exposed to equities, you get equity beta. If you're exposed to fixed income, you get fixed income beta. If you're exposed to real estate, you get real estate beta. So beta is dumb. Now, smart beta is a dumb strategy, but brilliant marketing. And people raised tens of billions, maybe even hundreds of billions of dollars around this idea. And all it really was old technology, right? Factor-based investing, right? Low price to book or book to market if you want to invert it, or, earnings momentum or whatever it was, just factor-based investing in a different package. And the problem was, it wasn't like illegal, or it really was overpromising and under-delivering, but there was no violation of law. So the SEC didn't crack down on them. And it wasn't like calling yourself a growth fund and then having no growth stocks in it. That's actually against the law. You can get busted for that. So do I think that this is that? I think it's on the border. I think it didn't start that way. I think DeFi, decentralized finance, is a legitimate, kind of offshoot of the blockchain application to financial services, and the idea of truly decentralized financial services is a winner, and it's going to be a big thing. Do I think it has potential
but how do you,
on the edge?
real quick, how do you define that?
So I'll define it as remember, we're talking about the big E entrepreneur, the little E entrepreneur, taking new technology, right? Whether it's blockchain technology or forms of cryptocurrencies or other forms of technological innovation, applying that to centralized finance and taking out the rent-seeking middleman, right? Think about, making the back office better for a particular transaction. I'll give you an example. So our company that we've invested in, Figure Technologies, to me is DeFi. Why? Because they are taking the DTCC, right, the clearing agent for all securities transactions, and saying that's old technology. It uses fiat currency. It doesn't use digital currency. It has 3-day settlement instead of instantaneous settlement, and there's no transparency. I can create a decentralized, I take it back. It's not DeFi because it's a centralized blockchain application provenance, which is still centralized. So it's not really DeFi, but it's a application of technology to traditional finance. To make that the next level would be, to your question, is Bitcoin DeFi or is Ethereum DeFi? Yes, because now I have a decentralized network where physical money, fiat money, is exchanging into exchanging into digital currency, Bitcoin, and is being exchanged around the world on a global basis. That's a form of decentralized finance. Now, can I take other forms of financial services business models, whether it be banking, whether it be exchanges, whether it be tools and software and systems, and bring them into the decentralized world? Could I make a decentralized derivatives exchange so I don't need the Chicago Mercantile Exchange? Yeah, I probably can do that. Or
Can I ask you a question?
But somebody could do it. Yeah.
Can I ask you a question? I actually don't know how to frame this. If I were to box you, I'd say you're a very progressive institutional investor. Is that fair?
Fair. Yeah, fair.
And then I would say on my side, I'm sitting in rooms with dudes with hundreds of millions of dollars that are not traditional or formal in any way.
Yeah.
Right? Do you feel like you have your ear to the ground of that kind of counterculture of investors?
Great question. So kind of. I'm not as close as I would like to be. I am.
Do you know there's a shockwave that happened 8 weeks ago?
Oh yeah, absolutely. And we were involved, on the edges. We weren't involved at the core, but we were involved on the edges. And look, I think one of the challenges of any business is breadth, right? Depth versus breadth. And we've all heard the thing, an inch deep and a mile wide. or a mile wide and an inch deep, however it goes. But I think the challenge of this for me, and I do come out of the traditional institutional world.
And then honestly, I trust you more. Like, I'm just asking you.
That.
Like, I'm actually just asking you. Like, do you know what I'm hearing on the other? Like,
yes,
I do.
In
the other side. Like,
and what I'm trying, and what I would like, I would like to be moving faster to take some of that fringe. And you and I talked about this in the last one, which is the whole thing about cell phones and pagers. All technology starts at the fringe. All of it, right? First pager, drug dealer. First mobile phone, drug dealer. First internet users, porn. Technology always starts at the fringe. And that's okay, because they're locked out of other systems. You know, why do cannabis providers use crypto? Well, because they're not allowed to use the traditional banking system. Why is that? Well, because it's not regulated yet. Once it's regulated and they can tax it, then they'll be able to use, traditional banking system. So every fringe element starts with these new technologies. I would love to be closer to some of that fringe, which is why I like the relationship with you and your team and your guys, because you are closer to that. Because you're right, the wealth creation opportunities are pretty extreme at those early stages. Now, the key,
and I'm not backing these guys.
No,
I literally sit in rooms and I'm looking at them and I'm like, you guys are crazy.
Careful? No, should they be careful?
I don't think they know what the fuck they're talking about.
No,
to be completely honest,
some of them are at risk, and we saw that with the ICOs, right?
I spot random savants. So every once in a while, I will spot a savant that I'm like, you are the king of 300 of these dudes that all have $50 million. Mm-hmm. So there's these small groups. What I'm seeing is that there's these, it's like networking, right?
It is like networking. That's my point on breadth is one guy can't be as broad as I would like, because I do have a traditional business. I have my legacy business, and
you got grandkids coming.
But here's the thing, right? I went 7 years ago when I first learned about all this. I spent 0 time in this space. Now I'm up to 70, 75%. And people say, well, that's crazy. Why would you do that? Why would you risk your reputation? I'm like, I'm not risking my reputation. I think I'm building my reputation, because look, I think this is the future. And I think some of the kids, and I don't mean I mean kids affectionately, not derogatorily. Some of the kids that are involved,
they're kids.
No, they're kids. And again, I mean that with great affection, because I think all innovation comes from kids. Because
if I set up a phone call with you with $400 million on the call of basically kids, will you listen? Will you just hear them out?
Of course. I would love to partner with them, because
you'll be shocked.
No, because here's the thing. I can bring things to that conversation that they need, that they don't even know they need. They can bring things to the conversation that I know I need, right? That's the one benefit of age, is you know what you need. You know where you need help. You know where your deficiencies are. When you're young, you just don't know yet. And so there's this great, again, back to being really old. So there was this, and I hate to use the example because he's been, now discredited, but Bill Cosby was, before he was a bad guy, was a really funny comedian. And he did this bit when I was growing up about this kid. And he said this kid could ride his bike anywhere. He could ride across the top of the fence. He could ride up the swing set, across and down. He could do circles 3 inches off the ground, and he never fell. So did you know what first time that kid fell? When someone explained to him how gravity worked. And that's how these kids are doing it. They don't know about gravity yet. And so they're building, they're developing, and they come. Now, what they need to be careful of is there is a line, and
there's collusion.
Look, there's a line.
I mean, to a certain extent, and a
good
lot of
business practices. It's the difference between tax avoidance and tax evasion. You should do everything possible to avoid paying taxes. You should never evade taxes, because one is punishable. Same thing here is there are things that you should do in development and in, it's like the securities, right? The people who did ICOs, many of them said, well, we're not securities because, Ethereum has been deemed not a security. Nope. nope, what you did was still security, and that's why you're in trouble, and that's why you're going to pay fines. The same type of thing is going to happen here. And look, if one person did a project, institutions like the SEC aren't going to care. If 10 people do it, if somebody makes $100 million and they're public about it, yeah, people are going to, it's going to attract attention. And so ultimately, what I say is the DeFi movement is real. It's not just smart beta. There are applications of DeFi which are real and are going to be profound and are going to be big businesses and great investment opportunities, and I hope to invest in some of them. There are also going to be scams. And the people that propagate the scams are going to get in trouble. And so if you're on the edge, you didn't mean to be a scam, but now you're on the edge and you don't know how to get back off the edge. Again, taking my Grand Canyon thing. There are plenty of people who didn't intend to fall into the canyon and die when they were taking that selfie. But unfortunately, one just happened right before I got there. So they got too close to the edge. So staying away from that edge, staying away from that third rail, and making sure that you're doing things that, look, I can't remember, I think it was Jay Clayton. And Jay Clayton, some people love him, some people hate him, but he said one thing that I thought was really interesting is, he said, why aren't you adopting, crypto faster? And why aren't you approving a Bitcoin ETF? And he said, well, look, we've had a set of rules and requirements, and that set of rules and requirements has created an economy and a financial system that's worth, 30 some odd trillion dollars, and created a lot of wealth and done a lot of good in the world.
Yeah.
That's pretty good. And I agree with that.
And stability and reputation has a
I agree with that. But I do think that we have to push the boundaries. I think we have to live outside the comfort zone. And I say this about investing, right? If you make an investment and you feel good, you're probably going to lose money. If you make an investment and you feel sick to your stomach, you're probably going to make a lot of money. And the more sick you feel, the more money you're going to make. Now, that doesn't apply to following the rules. If you do something and you're breaking the rules, bad things usually happen. Not always. Plenty of people do stuff and get caught. And so I think what we all should be focused on is how can we take what is a sound commercial idea, which is taking the legacy financial system, which is dependent on banks, which are a cabal, which have been rent seeking and are facilitated by central banks, and not blowing it up. Like, the anarchists, the people that blow it up. No, I don't like that. What I want is to evolve. I want an evolution, not a revolution. And I want to evolve to a system where code replaces rent-seeking middlemen, where systems and systems architecture and decentralized computer systems and triple entry accounting do the things that dual entry accounting relied on these centralized institutions to do over time. And so I think it's coming, but the problem is it will come faster if everybody stays on the right side of the bright line. And the more people that cross the line, the less well off we'll all be.
Humanity will always there's always.
Of course. Easy money is hard to resist. Greed. Listen, greed is good. Excessive greed is bad. Cheating, bad. Playing by the rules, being better at the game, right? If you can count cards in your head, why is that illegal? But you can't use a device, you can't use a system, you can't have somebody
counting cards in your head. If that's the truth, I was talking with Dana White the other day. He wins a lot, and all the hotels try to kick him out. So they don't even care anyways. Even if you're not doing anything legal, if you're beating the casinos too much, they will still extradite you.
They'll still kick you out because you mess with their system. And
it's a service business, and something else different is happening. And I appreciate what you just said. And honestly, first off, I appreciate this interview. I appreciate talking to you. I think you know that.
I love it.
You can probably have a very strong voice in this space right now.
Yeah.
I just turned 35 years old a month and a half ago, right? So I'm not very young anymore, right?
That's right.
And I've been fighting the last 2 months, like I'm fairly prominent. I don't flex it.
No,
right?
you are. No, you are. That's why I'm doing
No,
this. That's why I'm here.
But no,
this is fun.
but not to say that. It's just to say that, like, not like that. It's just to say that, like, in the circles that I'm in, right?
Yeah.
The guys that I know, which aren't you, right? Like, you'll talk to me on an interview, but the guys that I know that are trading large amounts of crypto, they keep me around because I'm partners of the best dudes they know, right? Yeah. And so I'm fairly prominent in the fact that, like, people can erase me, and
you can't be canceled.
Right. More or less. I built myself in as, like, I have a pretty good fucking reputation, right?
Yeah.
But the last 2 months, I've started to collide with some personalities lately because what I think is about to happen again is that people are going to learn they're going to forget what happened in 2017.
Yeah.
They're going to over leverage and play with the rules too much.
Yes.
And they might put crypto in another 2 years of over regulation, and they might open the doors for governments. And honestly, if they do enough messed up shit, it might even be warranted, right? Like, I would prefer that we don't have to actually live in a world that, like, I would hope that, like, we could all build our own stuff and, like, not have to have the SEC look at us and all these things, right? I would love to live in a world.
It comes down to motivation, Patrick. It comes down to motivation. And you and I both know this, right? You know people, you know when they're good, you know when they're less good, you know when people have the proper motivations and incentives, and you know when people are trying to pull a fast one. We've all met them, right? And to your point, what we need, right, as a industry and as a community is we need the good people to focus on good projects and to be inclusive and to build towards this better future. Unfortunately, we will not be able to get rid of all of the bad actors, but there are still, I mean, I talked to one the other day, someone trying to pitch me on a penny stock scam out of a Canadian stock market. To this day, right, there are bad actors in the stock market, right? We've seen the fraudulent, IPOs on NASDAQ, and look, money brings out the best in people, brings out the worst in people,
but ICOs are back, like that evolution. No, I feel like like, I mean, not like named that, but like,
no, it's under a different name, and they think it's a different thing.
Exactly.
It's different people doing the same thing.
It could be done properly, but it could be done really well. Like, it could be a harmonious thing. And I don't know.
We'll get there.
And we'll probably get lost here. But
no, it's all going to work out.
What I want to say to you, Mark Yusko, is if you want to actually, and I've really enjoyed talking with you, and I think that you have a very good message, and it means a separate thing between me and you, or maybe it's just something you do, and you have one of the other best.
Help me help you.
Right? You have one of the best voices too, right? Like, this is on your team.
Yeah.
Tell these fucking people on the market right now, don't overdo it, and let's not go back to that world where we go 2 more years and everything's shut down.
Be long-term greedy, not short-term greedy. Partner with the right people.
But we can
play by the rules. And look, I would be happy to help. I would be happy to talk to some of the people you're talking about. And I would also be happy to help bring other institutional investors into this space so that people feel valued, right? So there isn't a need to go out and push the limits to raise a few more bucks.
Do you want to do something cool?
Yeah.
And I'm going to let you go in a second.
All right.
Like, we got to you saw Dave Portnoy with the Winklevoss twins the other day?
Oh, yeah.
You want to get Dave Portnoy with me and you and Pomp or something? Dude, this is the guy he has the reach. Like, we can actually have a broader conversation in crypto.
All right, let's do it. I'm in. I'm in. So you arrange it. I'll be there.
Love it.
All right, man. I do have to actually run.
No.
I got to go to that lunch. I'm all excited to go to that lunch. So
Get out of here.
this was fantastic.
You know what? I'm tired of you. The worst interview I've ever done. Mark Yusko. I'm never having this interview again.
Such a bum. Such a bum.
No.
All right,
Mark,
man. Awesome.
Great guy. Hang on. Last words. All the students listening. Last words.
Last words? All right. I tweeted out a couple weeks ago advice to my younger investing self. So go to Twitter and search for @MarkYusko, MarkYusko, advice to younger investing self. It'll pop up, and that's my last word. There's like 13 or 14 things that I wish I would have known more as a student, as a young person in my career. Again, I only know now because of the benefit of wisdom, but those are my last words.
Hang tight. Let me end this with the recording. And I'm going to say 2 seconds. So, hey, for everybody listening, it's another Reimagine. I don't even know how this is a thing. This guy, Mark Yusko, who's, I think I consider you my friend now. We've talked a lot, and listen to him. Very smart guy, lots of experience. Enjoy the rest of this conference, and we will talk to you later. Hang tight, Mark. Give me 2 seconds.